Welcome to the deep dive. Today, we're going to be taking a closer look at Metropolis Healthcare Ltd. Specifically, their Q2 FY25 financial results. You've sent in some really great questions, and we've got a whole stack of materials to help us answer them. We've got their press release, their investor presentation, and all those really detailed financial statements. You ready to get started?
Absolutely. I think, it's always exciting to have this kind of multifaceted view. We've got, the raw numbers, the company's own narrative in the press release and presentation, and of course, your insightful questions to guide us.
Yeah, absolutely. And speaking of that press release, Metropolis came out strong, announcing some pretty impressive results right off the bat.
They did indeed. I think the headline is undeniably positive, strong Q2 and H1 FY25 results. And you know what's really interesting is they actually exceeded market expectations.
Yeah, and they addressed a few of your key questions right away. First, they confirmed that revenue growth is right on track with their guidance. Always good to see a company hitting its targets right. But maybe even more importantly, their margins are expanding.
That's a crucial point. It suggests that they're not just growing for growth's sake, but they're becoming more profitable as they scale. Now, the press release doesn't really delve into the specifics of what's driving this margin expansion, but it's definitely something we'll want to investigate further when we look at the investor presentation and financials.
For sure. And there's one more interesting tidbit. From the press release, they appointed a new interim CFO, Mr. Aditya Shinde.
Yeah, leadership changes are always worth noting.
Right.
A new CFO can often signal a shift in financial strategy or, a renewed focus on certain financial goals. So Mr. Shinde's experience and expertise could definitely shape their approach moving forward.
Okay, so big picture things are looking pretty good for Metropolis. But you've asked for specifics, and luckily the investor presentation has those glorious details that we crave. So let's dive into the numbers. What stood out to you?
Well, for starters, their revenue growth is really healthy. We're talking a 13.4% year-on-year increase in Q2 and 13.2% for the first half of FY25. But what's even more impressive is their EBITDA and PAT growth. Those numbers are truly eye-catching.
Yeah, I'm seeing that too. But for those of us who don't speak fluent finance, could you break down what this jump in EBITDA and PAT actually means for investors? Is it as good as it sounds?
It really is. It shows that their strategic focus on high-margin services, like specialty testing, and those true health wellness packages is really paying off. Their margins are growing faster than their revenue. And that's a sign of smart, profitable growth.
So they're attracting the kind of customer who are willing to spend a bit more for those specialized services. That's a good sign for future profitability.
Exactly. And this strategic shift becomes even clearer. When we look at their B2C versus B2B growth, Metropolis is putting a lot of emphasis on growing their B2C segment. And it's outpacing B2B by a significant margin.
I'm seeing that too. And the investor presentation actually gives us some concrete examples, like their B2C revenue in Maharashtra is booming. It's being driven by, more doctors recommending their services and a whole network of new centers opening up.
Yeah, it makes sense when you consider the bigger picture. Metropolis is tapping into this growing trend of consumer-focused healthcare. More and more people are taking a proactive approach to their health. And they're willing to invest in tests and wellness packages. You give them more information and control.
It's like people want to be in the driver's seat when it comes to their health, and Metropolis is giving them the tools to do just that. But is this focus on B2C sustainable? I mean, is there enough demand to justify this shift?
Well, the investor presentation actually highlights a key statistic. India's out-of-pocket healthcare expenditure is one of the highest in the world. So Metropolis is positioning itself to capture a share of that spending, and it seems to be working.
Okay, so we've got a company riding a major trend, focusing on profitable growth and hitting its targets. So far, so good. Now, you had some questions about their overall financial health, which is where the balance sheet and cash flow statement come in. Should we be worried about anything there?
Not at all. In fact, the balance sheet paints a picture of financial strength and strategic investment. First, their cash and cash equivalents have significantly increased. Since March 2024, this points to strong cash flow generation from their core operations, always a good sign.
Right, because a healthy cash position means they have more flexibility
Yeah.
to invest in growth opportunities, which seems like they're doing.
You're reading my mind. Look at their investments line item. It's jumped significantly since March. This is due to that change in investment policy they mentioned. And it suggests they're feeling pretty confident. about their future prospects.
So instead of just saying they're changing their investment policy, they're actually putting their money where their mouth is. What kind of investments are they making, though? Does it seem like they're making smart choices?
Well, it's not all spelled out. But the increase is primarily driven by investments in property, plant, and equipment, as well as intangible assets. It'll be interesting to see how these investments contribute to their long-term growth strategy.
Okay, strong cash position, strategic investments.
Yeah.
What else is jumping out at you from the balance sheet? Anything that raises a red flag?
Their trade receivables have increased, which makes sense, given their strong revenue growth. But what's important is that their DSO, or D sales outstanding, has remained stable. This tells us they're collecting payments efficiently and managing their cash flow well.
So no alarm bells ringing there. What about the liabilities side? Anything we should be concerned about?
Actually, it's quite the opposite. Their borrowings have been completely wiped out since March 2024. They're relying less on debt financing and are in a much stronger financial position overall. Even their lease liabilities have decreased slightly, showing they're managing those obligations effectively.
Yeah. Okay, so their balance sheet looks solid, ample cash, strategic investments, and well-managed liabilities.
Right.
Sounds like they're in a good position to weather any storms that might be brewing on the horizon.
I agree. And their cash flow statement reinforces this positive picture. It highlights robust cash generation for their core operations. In fact, their net cash flow from operating activities has increased substantially since last year.
So their core business is churning out cash, which they're then using to fund those strategic investments that we talked about. But those investments must be putting a dent in their overall cash position, right?
Well, their cash flow from investing activities is negative, meaning they're spending more on investments than they're receiving from asset sales. But don't worry, their robust cash flow from operations is more than enough to cover these investments.
Okay, so they're not having to go into debt or scramble for external financing to fund their growth. That's a good sign for their long-term sustainability.
Exactly. And their cash flow from financing activities shows they've been repaying borrowings and reducing their lease liabilities, further strengthening their financial position.
All right, so we've got a company generating strong cash flow, investing strategically, and reducing their debt burden. Their financial statements are painting a very positive picture indeed.
They are indeed. But of course, there's always more to this story than just the numbers. In the next part of our deep dive, we'll take a closer look at their Metropolis 3.0 strategy and explore what they're doing to achieve sustainable growth in the years to come.
Sounds like a plan. See you back here soon for part 2 of our deep dive into Metropolis Healthcare Ltd.
Welcome back to our deep dive into Metropolis Healthcare Ltd. In part 1, we explored their impressive Q2 FY25 results and saw just how strong their financial foundation is. But numbers only tell part of the story. So now let's delve into their Metropolis 3.0 strategy and unpack how they plan to achieve sustainable growth. Yeah, that's where things get really interesting. Metropolis 3.0 outlines a clear roadmap for their future, and they've broken it down into 3 key pillars: strengthening the core business, expanding into adjacent areas, and driving sustainability.
Okay, so 3 pillars to support their future growth. Let's start with that first pillar, strengthening their core business. What exactly does that entail?
Well, it's all about, enhancing their existing operations and ensuring they remain competitive. In that core diagnostics market, one key focus is on digital transformation. They're investing heavily in building a robust customer data platform and incorporating AI into their processes.
Ooh, that sounds right up our learner alley. It suggests they're aiming to personalize the customer experience and stay ahead of the curve in an industry that's becoming increasingly tech-driven. Can you give us a concrete example of how they're using AI?
Absolutely. They've developed AI-verified tests, which leverage artificial intelligence to improve the accuracy and efficiency of their diagnostic processes. This not only enhances the quality of their services, but also allows them to handle a larger volume of tests, potentially leading to faster turnaround times for patients.
So better accuracy, better efficiency, and a better experience for patients. It sounds like a winning combination. What about that second pillar, expanding into adjacent areas? Where are they looking to grow beyond their core diagnostics business?
Well, they're eyeing several promising areas. One is radiology, think X-rays, MRIs, and other imaging services. They're also exploring allied health services, which include things like physiotherapy and nutrition counseling. And they're even dipping their toes into primary health care.
Wow, talk about ambitious. It sounds like they're aiming to become a one-stop shop for healthcare needs. But is that realistic? I mean, branching out into so many different areas requires a lot of expertise and resources.
Yeah, you're right. It's a bold move. But they're not necessarily going it alone. They have indicated that they're open to forming strategic alliances and making bolt-on acquisitions to accelerate their growth in these new areas. This approach allows them to tap into existing expertise and infrastructure rather than starting from scratch.
So they're partnering with or acquiring companies that already have a strong foothold in these adjacent areas. That's a smart way to mitigate risk and leverage existing expertise. Okay, on to their third pillar, driving sustainability. What does that look like for Metropolis?
Well, it's clear that Metropolis
Yeah.
isn't just focused on profits. They're committed to environmental, social, and governance principles, ESG principles. They've laid out specific goals in areas like emissions reduction, water and waste management, employee well-being, and community development.
And it's great to see that they're not just paying lip service to sustainability. They've got specific measurable goals for each of these areas. They even released their first Business Responsibility Sustainability Report, or BRSR, last year, which shows they're serious about transparency and accountability.
Absolutely. And they've set some pretty impressive targets. For instance, they're aiming for carbon neutrality by 2043, which is a pretty bold goal for a company in this industry. They also plan to achieve zero waste in their offices and significantly reduce their water and energy consumption by 2030.
Those are ambitious goals, but it's encouraging to see them taking concrete steps to achieve them. They're investing in renewable energy, implementing efficient waste management systems, and even exploring ways to reduce their air travel.
And it's not just about environmental sustainability. They're equally focused on social responsibility. Their MedEngage CSR project, for example, focuses on tackling non-communicable diseases like diabetes and anemia. They aim to reach over 250,000 individuals through this initiative.
That's fantastic. They're not just minimizing their negative impact, they're actively working to make a positive difference in the communities they serve. So overall, it seems like Metropolis is taking a holistic approach to sustainability, looking at everything from their environmental footprint to their social impact and ethical governance.
Exactly. They're really trying to walk the walk, not just talk the talk when it comes to sustainability. And it's clear that this commitment is woven into the fabric of their Metropolis 3.0 strategy. They see sustainability as integral to their long-term success.
Okay, so we've explored their three pillars of growth: strengthening the core business, expanding into adjacent areas, and driving sustainability. What's your overall impression of their strategy? Does it seem like a solid roadmap for the future?
I think it's a well-defined and ambitious strategy that positions them to capitalize on key trends, shaping the healthcare industry. Their focus on digital transformation, consumer-centric services, and expansion into new areas aligns with the evolving needs of the market.
And it seems like they've got the financial resources and the leadership team to execute on this strategy. But of course, no strategy is without its risks. Are there any potential challenges or roadblocks that could hinder their progress?
Well, there are always challenges in any dynamic industry. One thing to consider is the regulatory landscape. The healthcare industry is highly regulated, and any changes in government policies or regulations could impact Metropolis's operations and profitability.
That's a good point. Navigating those regulations can be complex and time-consuming. Anything else we should be keeping an eye on?
Competition is another factor. The diagnostics market in India is quite fragmented, with a mix of national and regional players. So Metropolis faces competition from both established players and new entrants.
So they need to constantly innovate and differentiate themselves to maintain their market share.
Exactly. They also need to remain vigilant about maintaining their commitment to quality and accuracy. Any missteps or scandals could severely damage their reputation in an industry where trust is paramount.
Absolutely. And as they expand into new areas, they'll need to attract and retain top talent to support their growth. Finding and keeping skilled professionals is a challenge in any industry, but especially in healthcare.
Right. It's all about building a sustainable and thriving workforce that can adapt to the changing demands of the industry.
Okay, so we've identified some potential challenges, but overall, it seems like Metropolis is well equipped to navigate them. They've got a strong leadership team, a clear strategy, and a solid financial foundation. But to really understand their performance, we need to dig a little deeper into those financial statements. Ready to put on our financial analyst hats again?
Absolutely. Let's delve into those numbers and see how Metropolis's financial performance stacks up against their strategic goals.
Welcome back to the final part of our deep dive into Metropolis Healthcare Ltd. We've covered a lot of ground: their strong Q2 performance, their ambitious Metropolis 3.0 strategy, and those rock-solid financials. Now I think it's time to take a step back and look at the bigger picture. How does Metropolis fit into the wider healthcare landscape?
Yeah, it's always fascinating to zoom out and see how a company's strategy aligns with the broader trends shaping their industry. And in healthcare,
Yeah,
there are some pretty significant forces at play.
for sure. And we've already talked about one of the biggest trends, the rise of the healthcare consumer. People are
Okay.
taking a more active role in managing their own health,
Yeah.
seeking out information and services that empower them.
Exactly. It's like what we've seen in other industries. Consumers are demanding more personalized experiences and greater control. And it seems like Metropolis is right on top of this trend, with their focus on B2C growth and their investment in digital tools that enhance that customer experience.
They're really catering to that desire for information and control. But is that enough to stay ahead in such dynamic industry? What other trends should we be paying attention to?
Digital health technologies are really transforming the entire healthcare landscape. Things like telemedicine, remote monitoring, AI-powered diagnostics. These are all changing the way healthcare is delivered and accessed.
Yeah, it's like technology is revolutionizing healthcare, just like it has so many other aspects of our lives. It's exciting, but also a bit overwhelming to keep up with all the changes.
I agree, it's a fast-moving space. But Metropolis seems to be embracing these digital advancements. Their investment in a customer data platform,
Hmm.
their development of AI-verified tests, and their exploration of partnerships with tech giants like Salesforce. It suggests that they're not just riding the digital wave, they're actively shaping it.
That's reassuring to hear. It shows they're committed to staying ahead of the curve. But let's be realistic. No company operates in a vacuum. What are some of the challenges or potential roadblocks that could impact their future success?
Well, one thing to always consider is the regulatory environment. Healthcare is a highly regulated industry, and any changes in government policies or regulations could significantly impact their operations and profitability.
That's a really good point. It's always important to consider the regulatory landscape when evaluating a company, especially in an industry like healthcare. Are there any specific regulatory changes on the horizon that could impact Metropolis?
Well, there's always the possibility of changes to pricing regulations for diagnostic tests or new requirements for data privacy and security. Those are just a couple of examples, but it's something they'll need to navigate carefully.
Okay, regulation is definitely something to keep an eye on. What other challenges do you see on the horizon?
Well, competition is always a factor. The diagnostics market in India is quite fragmented, and Metropolis faces competition from both established players and new entrants. So they'll need to continue innovating
Mhm.
and differentiating themselves
Mm.
to maintain their competitive edge.
Right. It's like a constant race to stay ahead, especially in an industry as dynamic as healthcare. They can't afford to rest on their laurels.
Exactly. And another crucial factor is their ability to attract and retain top talent as they expand into new areas and adopt new technologies. They'll need a highly skilled workforce to support that growth.
And that's a challenge for any company, but especially in healthcare, where there's a growing demand for qualified professionals. They'll need to create a work environment that attracts and retains the best and brightest.
Absolutely. It's all about fostering a culture of innovation, collaboration, and continuous learning.
So we've identified some potential challenges: regulation, competition, talent acquisition. But overall, it seems like Metropolis is well positioned to navigate these hurdles, and they've got a strong leadership team, a clear strategy, a solid financial foundation, and a commitment to sustainability.
I agree. They're a company that seems to be firing on all cylinders. They're not just focused on profits, they're also committed to making a positive impact on society and the environment.
So for you, our listener, what's the takeaway from this deep dive? Why should you care about Metropolis Healthcare Ltd?
Well, if you're interested in investing in companies that are both profitable and purpose-driven, Metropolis is definitely worth considering. They're a growth story with a strong track record, a forward-thinking strategy, and a commitment to creating value for all their stakeholders.
They're a company that's not afraid to push boundaries and challenge the status quo, all while remaining true to their core values.
Exactly. And their story is still unfolding. It'll be fascinating to see how they continue to evolve and shape the future of healthcare.
Well, there you have it, folks. A deep dive into the world of Metropolis Healthcare Ltd. We hope you found it insightful and engaging. And as always, we encourage you to continue exploring and learning. There's a whole world of knowledge out there waiting to be discovered.